coronavirus outbreak may cost the world's airlines a combined $29.3 billion in revenue this year. The International Air Transport Association says air travel demand is set to decline for the first time since 2009. Carriers around the world reduced or suspended flights as a result of the virus. The IATA expects airlines in the Asia-Pacific region to take a combined $27.8 billion revenue hit and $1.5 billion for those outside of Asia. All right, let's talk business now with David Nelson. He's the chief strategist at Bell Point. Welcome back.
Thanks for having me.
So, David, the markets seem to have initially underestimated the impact of coronavirus. Is that what we're seeing now?
We may have, put out the all-clear signal a little too soon here. And just in your lead-in, you were talking about airlines. I think we have to differentiate between companies because, for an airline or a cruise ship, a lost seat is lost forever. But for an Apple or another company selling anything, that sale is likely to come back, later on in the year. It's the longer this persists and the longer these supply chains are disrupted, the more concerned Wall Street is going to get.
Well, we have had companies like Apple issue revenue guidance, lowering it, saying expect it to be less. But you're saying that from an investor's perspective, as long as the company can make up that deficit in the not too distant near term, you wouldn't get out of that stock.
For the most part, that's true. Investors will tend to look through this to the other side. But when they start to lose faith in how fast this is spreading, we kind of thought we were over the hump of this. Now, South Korea, you're seeing increased cases. Even the CDC here, it seems to be ramping up, almost like we're going to have an invasion, and they want to contain any outbreak that they have here in the United States. So the concerns mounted a little bit this week, especially late in the week, the last couple of days.
Another issue that we're seeing with all of these manufacturing facilities in China may actually play out to the benefit of some U.S. companies in the long term, and that is the acceleration of the decoupling process from China, because this is yet another reason to move production facilities out of mainland China, perhaps bring them back to the U.S. Is that another way that companies in the long term could potentially benut from this that investors are also looking at?
And certainly the United States could benefit because some of those supply chains would actually come back here or to other parts of the world. It was the political dynamic that had been going on for some time, but it was more related to trade. Now suddenly something like this, the inability of China to really control this thing, and actually the OPEC society that they had there, it appears, at least in the beginning stages, we weren't getting the full truth. The numbers were a lot higher than we were initially told.
But that can't be much of a surprise because we were saying all along, this is China. If China is saying that this is the reality, we can expect it to be far worse. So I guess it's just constant euphemism from optimism, if you will, from the markets that this will actually, all turn out for the best.
The one thing that we seem to be holding on to is 3%. If you think back to SARS, the fatality rate was around 11%, a lot harsher, except it was only 8,000 cases. Now we're up to 75,000 cases, and we seem to be hovering somewhere between 2 and 3%. If we start to push above 3%, I think investors will get concerned with that, and it actually played out a little bit in the market today.
Obviously, a situation of chaos and crisis also presents some opportunities. So who's poised to benefit from all of this? Where's the upside?
Anybody who had a lot of cash today was poised to benefit because you got things, obviously, at lower prices. But it's difficult to time that because what's going to be the catalyst to pull that trigger? Very often, Warren Buffett is a perfect example. He's about to have his shareholder meeting, and he's about to release his letter. And he's been sitting on cash for the last couple of years looking for an elephant acquisition. He never put it to work, and it's why he's likely underperformed the markets, not just for 1 year, but for 5 years and 10 years at this point. Warren Buffett is underperformed because he was holding too much cash.
But in terms of sectors or equities that can benefit from this, I mean, we've discussed medical supply manufacturers, we've discussed some of the pharmaceutical shares. Is that still an opportunity for investors to look into?
It is, but there's a political dynamic as well because we have an election coming up, and you have, a couple of candidates talking about Medicare for all. So investors are a little bit shy about coming into the medical sector, which would be an obvious beneficiary under normal circumstances.
All right.